Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, January the 11th, the year 2021. Let's talk trading. It looks like a trade on the chart with Walmal. And boys and girls and non-binary traders, just so you know, these videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, it looks like a trade on the chart, but
It happens all the time. You go back and you look through history. I could have made money here. I could have made money there. Man, I could have made $10,000. Right? Okay. And I think that really gets down to this whole idea of you can't just look at the chart and develop a method, develop a trading plan just by looking at the charts. Although I will say that's important. But it can't just be that. You need to actually get into the market and test things and try things, even if you're just testing it, a penny a pip or a dime a pip, whatever your broker allows you to do. You got to go and do it because you know what? We see so many times where the market will go in a particular direction. It's setting up, on your chart, and next thing you know, you say, okay, my trigger point's going to be here. And you could never event it because it literally paints a 5-pip candle or it paints a 10-pip candle, and it happens, doesn't happen all the time, but it certainly does happen, and next thing you know, and if you did go and enter, and let's say you had a market order sitting out there, a pending market order sitting out there. Next thing you know, you got it in at the top of the trade. And now instead of you getting a 5 or a 10 pip win, you're actually sitting there at the very top of where the move was. And now it's going to move against you. And now you're going to be underwater and you're going to take a loss. So that's just the reality. That's why you got to go out there and you got to go out and trade it. You got to go and learn the market. You got to go and live and breathe the market.
yeah, there was a trade last hour, and actually it happened last week, so we were saying we're going to do it, but it just happened last hour. Down here you see this one ball put in right around 80, and I called out to Walmart. I said, hey, I'm thinking about going long at 80, and this thing jumped up 5 pips in the blink of an eye. It was like there's no way I could have gotten that trade. But you look at the chart right here and you go, oh yeah, well, the candle closed there and I put my trade in at 80 and I'd be in and I could have made 5 or 10 pips. No.
And more than likely what would have happened is if you did go and jump in on it, who knows where you actually would have even been filled. If you would have gone and jumped in it right at the very beginning, and next thing you know, the thing painted 5 pips against you immediately, actually not against you, but in the direction that you were, but you got in 5 pips late, and next thing you know that, the reality is the broker may not even put you in 5 pips, because usually when it paints a candle like that, what happens is there are so many orders that are out there for buys at that moment in time. There's no room for you to get in. You got to wait until there's somebody out there willing to sell to you. And if you don't get that, you're just going to get in very, very late, and now you're underwater. Or the other thing that can happen is that the spread just gets so big, and they fill your order, because they're good guys. They want to go and fill your order. And the thing is, they're going to fit your order with a, sometimes 3, 4, 5, 6 pip spread, and now you're really in trouble.
Yeah, because it's just so funny how these things happen, and what I've learned to do sometimes, and it's slightly jumping the gun, but I have the B clock indicator here on my screen. Let me bring it up. The B clock that I modified, and you see, and it counts down, and then I also have my little TRO time indicator here, dollar TRO time. And so wherever my eyes are, I can be looking at this. So you see right now there's only 9 seconds left, 7. I might anticipate the move, and I might click in right as this thing switches, or just maybe 1 second before that candle closes, because I want to be in the trade. But you have to be sure you want to be in the trade when you do that. Otherwise, anything, it could go against you. So, and that's just trading. But if you really want to be in it and it goes your way, then you've got it. You're in at a price near where you want it to be in the first place.
Yeah, and the thing is, I'm glad you brought that up, because one of the things that you see is, at least my observation is, I don't have any statistics to prove this, but it just seems to me that more times than not, when you do get that candle that just gets painted, the entire candle gets painted, 5-pip candle, the entire thing gets painted, in a flash of an eye, or a flash, and just literally in a flash. The reality is, it usually happens at the turn of a minute. More times than not, it happens at the turn of an hour or a turn of a 15-minute. And the reality is, a lot of those institutional traders out there, they don't trade like us. They're not sitting in front of their terminal, sitting here waiting to press the buy button, the sell button. What they do is they put in a trade, they put in a buy or they put in a sell, and if it's a big trade, they put it in and they have it set up that it goes in at a particular time. And the reason why is it makes sense. The reason why is because if they're in a situation where they got to go and buy, let's say 2 million British pounds using dollars, okay, what are they going to do? Well, what they're going to do is they're not going to want to just go in and put a buy for 2 million, an actual 2 million, not a leverage 2 million, but an actual 2 million. Well, what are they going to do? They're going to sit there and say, you know what? If I just drop an order for 2 million right here and now, that's going to drive price up. I may not get the price I want. It's going to make my price worse. So what I'm going to do is I'm going to go in at certain times of the day. I'm just going to drop in, and hope for the best, that I get the best price that I can. And that's how they go and place their orders out there. Well, you've got a couple of institutional buyers at the same time dropping a big order in at, let's say, the top of the hour. Well, guess what? That's going to move the market and move it maybe 5 or 6 pips. They don't care if it moves 5 or 6 pips, but they do care if everyone was to go and drop all of their buys in at the same time and then moves it 25, 30, 50 pips. That they do care about.
Especially at that level.
Exactly right. Because most of the time these institutional buyers, what are they doing? Why are they buying so much? Well, it's the type of thing where they got to go and clear money in order to go and buy oil, or they got to go and clear money in order to buy, parts or inventory or whatever it may be. And so they will, part of the equation that's out there when you're buying something. Let's say you're manufacturing a part, over, let's say over in China. Okay, and the thing is, you need to go and buy it on $1. Well, if you're sitting there in Great Britain, what are you going to do? You're going to sell your pounds to get dollars, so you can then take those dollars and then buy whatever you're going to go buy. Well, there you go. That's what's going to happen, and that's going to go. And if you bought everything in one shot, that's going to drive the pound dollar down. Because the dollar is getting stronger. And that's really the game that's being played. We talk about, in Forex, a lot of times we sometimes lose track of what's happening behind the scenes. Why does the Forex market even exist? It's not just that we as traders, as retail traders, can go and try our luck, so to speak, on making money by just trading it back and forth. No, there's a real reason for the market to exist. And that's so that different countries, different big banks, different big institutions and companies are able to get cash so that they can go and buy a particular thing from a particular country.
That's exactly right. And, the main takeaway from today is that, looking at these charts, especially if you look at a 1-minute chart, now an hour chart, that could be a different story, but not always. But, for example, we just crossed the previous H1 high. We're about 3 pips above it at the moment. So there was money to be made there. We're coming up to the 30, and we got the ask was right at 30 just a second ago. And so you can see that, right now you would have an opportunity to get in at 30.
Yep.
But
yeah, you have.
Yeah.
Yeah, you would have the opportunity to get into that trade because, it's there. The market's waiting for you to get in almost, so to speak. But, yeah, you would have the opportunity to get in. Now, would I take this trade as a Walmal trade? Probably not. I don't have enough there because I'd want to see it to go and test that line, maybe go above it, come off of it, and then go back across it again. That's me. I want to be a little bit more cautious on that. especially because we're in the 12 o'clock hour on the East Coast of the U.S. So it's market's starting to wind down. All the New York boys are out to lunch right now. The London boys have gone home. So we got a big share of the market that's just not there right now. So, when I say a big share of the market, I mean a big share of the actual big traders. So that wouldn't be my favorite move to take right now. But, it's a potential sale, and it's a nice thing, or a potential buy right there. The reality is we've only moved 12 pips this hour. It's kind of slowed down a little bit. We're sitting here right at the 30, right below the 30, depending on who your broker is. If it's the type of thing where, I don't know, I might take it, I might not take it, but I'd be really cautious.
Yeah. Now, I just want to run through the charts for the boys and girls here. We can see on the monthly, we crossed the previous month's high, and now we pulled back. We're 116 pips from the open, 177 from the high. Moving on the weekly chart, you can see there's still gaps that need to be filled. On the opening range breakout, we broke out Sunday night, early Monday morning, so you can see that trade would have paid off. Once again, 116 pips off the yearly open, and we are 76 pips above the yearly high, yearly low, which we just put in, established today. On the inside bar from 4 days ago, we broke out of that once again. That happened last night. Range 108 for the pound. We've got 8 pairs over 100, so there's definitely action today. On the buy zone, you can see here with the pivot, we missed the pivot, but if you weren't fading the pivot, there was a nice short to be had. The rat zone. In fact, there's one trader out there that's really killing the rat. Give a shout out to Brian, and maybe one day I can get him on the phone here if he's not too shy. I know some of you traders, it's like, oh no, I don't want to talk, and that's okay. I can understand that. But once again, you can see there's a nice rat trade here. Any of you traders jumped in here. And I switched over to 15-minute because I believe that's what Brian was using. So you can see here, you had a red candle close, green candle close. You jump in right before it leaves, and, the rest is history. But, these rat trades happen every day, so it's not really hairy hindsight. Let's see. I don't know if I called out the weekly pivot. Yeah, well, here it is now at 135.99. So we might need to come back up to that weekly pivot. You can see here that's missed. On the daily, we missed, but we took out that pivot from right here that I believe had been missed on the daily. So you can see here that pivot from, I believe it was December the 30th, got taken out. Yeah, that's the 30th. Yeah. So we took that pivot out. We started in the wick zone out, but now heading back towards it. Price is at the psychological 35.25. And that brings us back to one of our trading charts. So, Walmal, like I said, we've seen a couple of those, in the blink of an eye trades today. And like I said, we saw a couple the other day. It's just something that, we as traders just have to deal with.
Yeah, and that's the thing, and that, I probably sound like a broken record, TRO, but I'll say it again because I think it's just that important. It's just as important as all those screens that you put up in the beginning. About making sure that you're keeping your brain management in check and keeping your trade management in check. Well, the reality is that's why we have rules. Because the thing is, like on that one flash move that we saw earlier today, you could have actually. If you didn't get in early like you had suggested and you got in and it just flashed on you like that, next thing you know, you're sitting at the very top of where it was going to go, you're probably going to take a loss on that. Okay, that's part of trading. It's okay to lose, and I say this all the time to folks, and, I'll say it here, and that is, what? It's okay to lose. Losing is part of trading. The thing is, do you control your losses?
Yep, and
So
that's
you go
right. And the fastest 15 minutes in trading is up. So, fellow traders, it's not what you trade, it's how you trade it. This is the Rumpled One signing off. So go out there and drain the banks.